in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn is with Hackett Financial out of Boca Raton, Florida. And this edition of the Moving Iron Podcast is brought to you by dawsontire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom delivering insights and dry shod boots, the official work boot of the Moving Iron Podcast. Well, Shawn, how you been, bud?
I'm really good. Looking forward to a little break here for the holidays and all, and kind of recalibrate things, get ready for 2020, which certainly hoping and expecting to be a little more normal.
Yep.
But I don't think markets are going to be normal. I think they're going to continue to be quite aberrant, wild, and volatile. But also a lot of upside volatility. So I think it's going to be it was a better year for ag producers in the back half of 2020. And I think 21 is going to be another good year if one can take advantage of some of these higher volatile prices that I think are certainly coming. So
absolutely. Well, barring a zombie apocalypse and a complete collapse of the dollar, I don't know that could get much worse than what it was in 20.
I heard that asteroid's coming.
That's probably that could be.
Yeah.
That's a real thing. So. Yeah, there's plenty of stuff going on in 20 that, the joke I've heard a million times is, the best thing about 2020 is it's almost over. So it's, that's something that I've heard quite a few times, and there's no doubt about that. I mean, it's just been a crazy year. The first quarter of 21 is going to be a bumpy ride, but it really feels like there is some momentum getting gained here. As you take a look towards the end of the year here, these last couple weeks of the year, it really feels like a lot of folks are just going to kind of call it a year and kind of go enjoy the holiday season and not have a bunch of crazy things happen. But that being said, barring some crazy news coming out of South America right now, this should be even keeled to the end of the year. There shouldn't be a bunch of crazy stuff happening. Correct?
Well, I mean, for the last month, grains really haven't done much, Casey. I mean, just look at a chart that's just been kind of drifting in a sideways range, kind of in a dull trade. Not much has been happening. There's been extra volatility in wheat up and down, but overall it's been flat. So I really don't see that trend changing. I don't see I don't see a catalyst for a big knockdown or a big knock up until we get into January. Now, once we get into January, then we have a lot of times the USDA in the January report will make their final call on production, yield, ending stocks in the U.S., and sometimes can make some initial adjustments to South American production. So that could be an important market-moving report. Obviously, weather becomes really, really mission-critical in January. Up to this point, whatever has happened, most of adverse weather can be overcome if January, February is good. But January, February cannot be overcome if it's not good. So this is a really, I think January is a critical time for some new catalysts to come in with some re-emergence of adverse weather in South America, and probably the USDA lowering crop potential and ending stocks in the U.S., especially for corn, even more. And that could be the catalyst that gets the market out of this sleepy mode it's in. And remember, at the beginning of the year, there's a lot of capital that flows in looking for, the big trade for 2021. And so there's a lot of money that will move into certain markets, and a lot of times if they think the grains are the place to be, a lot of that money will flood in that first half of January. So I would look for first half of January as the potential for some catalyst to kick this market out of its sleepy mode and maybe back into a more volatile environment.
Yeah, and I agree with that. I think as you take a look at what's going on, there's just there's caution. There's a lot of caution out there as people start to take a look around what's going on and what they see happening. But for the most part, there is, like I used the example the other day that there's a powder keg that some people want to make sure they get lit, and there's other people that are trying to cut the fuse before it gets to the powder keg. It feels like so. There's just a ton of stuff going on. So let's talk about the boxed beef market for a little bit. Cattle's one of those things that has been just hammered by the whole coronavirus thing, the shutdown deal. And as you take a look at boxed beef prices coming down, but the actual, live cattle prices haven't really fluctuated a bunch comparatively to what you see happening there. Where do you think that response from, how the virus vaccines are going to start have rolled out, and now we kind of got the presidential thing settled and things are moving forward there. I guess what's your thoughts on how the beef market's going to respond to some possible trends in the economy?
Remember that the cattle price, the animal price, is a function of how badly the processors want it,
right,
and how much are available that want to come in. And so we had wild, record high box beef prices, during the heat of the moment when they were shutting down plants. Of course, that didn't help the cattle price because they weren't able to process the animals. So the box price going down is suggesting that maybe we're starting to see holiday demand ease back, which is pretty typical, by the way. There's nothing unusual about that. The bigger feature for us is if you look at the cattle on feed that we saw last month. We're going to get another cattle on feed this week. We're getting less cattle on feed, which means we're going to have less future animals coming to the market in the first half of the year. So, and Australia, after a horrific drought, are now in the process of rebuilding their cattle herd from a complete mass liquidation. And so their supplies, our imports of their supplies are way down, are going to stay way down. So the supply side of the equation is going to stay snug. And we think, that as we move into the second quarter, and especially into the early summer, as this vaccine rolls out, whether it's the Pfizer vaccine, the Moderna vaccine, clearly more and more people are going to start to get confident that either I already had it, so I'm not worried about it.
Right.
I got the vaccine, I'm not worried about it. Or either somebody's not worried about it. But either way, I think it's going to make people much more comfortable to start going out and doing things on a more regular basis. And that means more restaurants opening, more people going to restaurants, and beef has a huge consumption component to that. And of course, the grilling season should be even more robust. So we're pretty comfortable and pretty constructive this market heading into the spring. We think we can work higher. Over time. I think we'll have a little bit of a demand issue here into the end of the year and first quarter, but we don't think the supplies of animals coming to market are going to be overbearing. And so we see the market kind of just grinding higher. I think we said this last week, and we're constructive. We think cattle market can work higher. We don't think it's a runaway bull market by any stretch of the imagination, but we think if you're a cattle producer and you're looking at the April contract, for example, we think it's possible we might make our way to 130 resistance on the chart. That might be a place that, as you approach 130 on April, that might be a place for cattle producers to make some cash sales. That would be kind of a signpost to look for to, where one might want to make some first half sales if you're. So.
Yeah. Okay. So the other thing that I want to talk about, so we haven't talked about it for a little while, but the weekly export report that comes out today. Plenty of stuff going on out there still. China still seems to be buying stuff, and maybe not in the volume that they were buying stuff, but there's still plenty of stuff going on. So as you take a look at this week's export report, what are your expectations there?
I don't think currently exports are really the driver anymore.
Okay.
I think if you look at the soybean numbers, they really can't buy anymore.
Right.
It says we really don't have any more to sell them. So, And if you look at if the USDA is truthful about the corn market in terms of yield and actual demand, increasing their export demand, I think we're going to be around 1.3, 1.2 billion bushels of corn. I mean, that we don't really have a lot more corn to sell either. So I think what the Chinese did is they bought what they could. They bought it cheap. And now the driver is going to be, can South America deliver? Can they fill in this gap post, so the Chinese have got themselves filled up with U.S. grain into the first half of the year. They're set. They're comfortable. They're going to order, truckloads and boatloads coming in every day. But can Brazil and South America and Argentina deliver from, let's say, late spring onward when they need to, when the U.S. is going to be offline, and that's going to be determined by January, February weather. And that's why that is such an important component. Second crop corn gets planted in January and February, and in Mato Grosso. And Mato Grosso is where the key soybean crop is in the worst condition, and where if we were looking for a problem to develop in January, February, would be that central west Mato Grosso area. So that to me is going to be the focal point for a catalyst for higher corn and soybean. But I don't think export numbers are really going to be the surprise anymore. I think the Chinese did a great job at buying all this grain when our farmers are willing to sell, and they got a good price. But now I think they realize they really can't, unless they want to run the corn market up to 5 or 6, buying whatever else they can. I think they know they kind of bought what they could,
Yep, that's kind of what it feels like. So, well, good stuff, Shawn. I want to tease something here real quick. Shawn and I did a interview with Dr. Valentina Zarkova, and for those of you that don't know who she is an astrophysicist and a mathematician that works for a university over in England, and she was gracious enough to come on the podcast and do an interview with Shawn and I about a lot of the stuff that Shawn's been talking about, the whole grand solar minimum and what that looks like, and the whole science behind all that and how that whole thing works, and we're gonna break that into 3 parts. But Shawn, I'll kind of give your kind of experience with that podcast, with that recording, and what your thoughts were coming away from that.
Well, what I came away from is how cyclical the weather is on a long-term perspective. I mean, it was just remarkable. She talked about this mathematical equation, which we won't go into, of course, but she talked about this mathematical equation that was like a prism, that it mimicked the past solar cycles and temperature cycles. I think she said something like 90%. Correlation coefficient, really, really high, and that we can then project forward with a high degree of reliability, because these cycles are naturally occurring, they're repeatable, they're statistical, they're mathematical in nature. Because her concept was that the solar system and the sun are this well-timed, tuned clock that keeps. And if you understand how this clock moves and the pieces that are moving, and you can describe them, then you can really project out weather, temperature, fairly accurately over a long period of time. And I just found it fascinating that here's so much, and her information came from established data.
Right. Like
data that's established, that is real, that is true, that no one is saying isn't right. And she just took established data and came up with. And by the way, it isn't anything that we haven't kind of talked about, but she came to it from that mathematician's physicist point of view that was just fascinating. I think your listeners are going to really get a better, full understanding of what all this is, and also feel more comfortable that what we've been talking about, isn't some snake oil or voodoo doll, kind of information, which some may think. It's actually based in really, really high quality, sound science. Yeah.
Very peer reviewed stuff. Nothing. I mean, like you said, there's nothing there that is some disputed this, that, or other thing. It's established science that people agree with and have gone.
And her conclusion, now, not that we want to. Give everyone the whole cost, but her general conclusion is that what we've been talking about, entering this, multi-decade period of reduced sunspot activity, reduced, generally global cooling activity, is what her work suggests, and that we're going to be entering, these kinds of grand solar periods, like she talked about Oort and the Maunder and the Dalton, and actually went over. Some of the conditions that were experienced during those times, and the difficulty in growing food during those times. And no two grand solar cycles are exactly the same, but one would have to believe that we're going to have similar challenges in growing food, and that we're going to need to find ways to adapt and get through this. As we always, she made the comment that we always get through it, and we will get through it. But I think it's very clear that that business as usual, from how we've been able to grow food over the last 30 or 40 years, is not going to be the same. We're not going to have the same conditions and the same ability to grow food in the next 30 or 40 years the same way we did it And that's not only a liability, but it's also an opportunity if you are one of those that innovates and comes up with those solutions that get you over the hump. So we see a lot of opportunity. In the interim, though, in the first 10 years of this, which is the shock portion of it that we talk about, you need to get prices up, money flowing in, capital flowing in, investments flowing in to come up with these solutions. So that means that we're looking for a much higher priced ag pricing environment. And for your listeners, U.S. ag producers, those that are buying used equipment, new equipment, should be a pretty good time for to be a farmer.
Yep, should be. Yeah, there's some of that stuff was over my simple head when she was talking about it, but a lot of it she really did a good job of explaining it down to where even a guy like me can understand it. Oddly enough, her math problem that she used to make that prism, same one I used to figure values on combine. So I got that math problem with no problem when she started talking about that. So, but
well,
same. Oddly enough, same deal. So it's good stuff. Good stuff.
well, the bottom line is I really hope your listeners listen in on the series, and I think we might be doing something in January, February. As a secondary talk on the CO2 relationship and why, from her perspective, it's not a correct assertion.
Yep.
And we'll let her speak for herself, but I think that it'll be another worthy and interesting discussion. Have a scientific approach as to why she feels CO2 is not really the driver, and why a lot of the purported claims that are being made are either over amplified or just not sound science. And so I think that'll be another good series that I think we'll be doing. What we'll be doing. So.
Yep, absolutely. So this interview that we did here to be a 2-part deal, and hopefully I have that out next week, kind of for your Christmas drive listening. So everyone in the car, you'll enjoy that information as it comes across there. But Shawn and I both will be kind of introducing what the podcast looks like and the segment that you're coming into and what that sounds like. So I'm pretty excited about it, man. I think it's a lot of great information, very timely coming into this 21 and 22 time frame that we've been talking, or 22, 21 and 22 time frame that we've been talking about here, where we're going to start seeing some changes in weather.
And your summit, I think, is in September. I think you said.
Yep, September 18th.
The timing of your summit, I mean, right on the cusp of what we think is going to be this pretty crazy winter. I mean, it could be just a really wild timing to have that conference and to have almost a front seat view, I think, of what the winter's going to look like, and be able to immediately start experiencing it. I think that's going to be a really cool time to be talking about all this stuff, and hopefully by then, everyone's real comfortable to come and participate. So.
Yeah, hopefully so. Vaccines out now, so we're all safe. Everything, you still got to wear your mask no matter what. So just remember that. Ridiculous. I
don't care what we have to wear, as long as we get back to some kind of normalcy again. I'll wear a mask if that's what needs to be done. I'm okay.
Yeah, I'm ready for things to get back.
I'm an ugly guy anyway, so I don't
me too. No one wants to look at me anyway.
I won't have to shave anymore.
There you go. Yeah, just let it ride. Get you one of these. Get you a face coat. Call it that way. All right, Shawn. Good stuff as usual. Folks want to reach out to you, get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. All kinds of information on there to see if what we're doing is of value to your listeners.
Absolutely. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast as they come out. Going to record one here coming up here probably today that'll have some information about some combine auctions that we watched. Aaron Fennell and I watched. Give you guys some insights on what we see happen in the combine market. A lot of crazy things going on there right now. So we got a good information there. Check out movingironllc.com for the latest information on the Moving Iron Summit that has been postponed to September 15th through the 18th. I'll have that information up on the website this weekend, so you guys can check that out. Also, check out all the blogs I've written. I've just posted one here called Echoes of the Past, basically comparing what's going on now to 2009 and 2010 as far as a combine auction or a combine retail marketplace looks like. So with that, I am Casey Seymour, Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. near. Move